Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. Today's Monday. It's June 5th. Don't ask me where this year is going. Don't ask me where this month is going. I'm still thinking February. I'm still thinking Valentine's Day. It's about 7:49 in the morning. The market's going to gear up to open up in a little bit less than 2 hours, about an hour and 40 minutes or so. As you can see here, the S&P is flat. The Nasdaq is actually down for once. Oh boy, what a run-up. And the Dow is actually positive today. Now, there's a lot of stuff to talk about this week. The biggest, most important thing is probably the energy market. Now, remember a few weeks back, right here, when 531, let's see here, January, February, March, April, May, about 1 month ago, right here, about 1 month ago, actually less than a month ago, let's see here, January, February, March, April, May, we're in June right now, about 5-6 days ago, I told you when we were down here that energy appears to be ready to run up. And in the last week or so, oh boy, did we run up. Matter of fact, if you look at the energy sector, you could see there's a big run up. Well, OPEC just announced another cut, and I'll get into that, but that could cause another spur of energy prices. If you're looking at XLE today, keep your eye on the 81.18 level. We need to overcome. If we can overcome this 81, if we can go above 82, 82 is the level. This thing can really move up to about the 86, 87 level. So we got to have it break above 82. So XLE 82 is the level. We're going to keep an eye on energies because they are in midstream right now. And when something's above the 20-day moving average, it tends to stay there till it goes to the overbought level, as you could see right here at these peaks. So there's still substantially more upside to go, as you could see right here. Now, I'll get into more of that in a bit. Today, you've got composite PMI composite final. You got factory orders, ISM service index. Tomorrow's pretty flat. And remember, today's the first non-fragmented week in a whole week. And we're coming off a major holiday. A lot of traders took last week off or took liberties and coming in late. So there wasn't a lot of trading action full force. Volume wasn't 100%. Now volume is going to be what it is. Now it is summer, but last few summers have been very volatile, so I'm not expecting a major holiday reprieve in terms of volume this season. You've got international trades and goods and services on Wednesday, and then you've got the petroleum report. That report will be very instrumental in light of what we're seeing with the energy market. Then you've got the jobless claims and wholesale inventories. Not a lot of major catalysts this week, which is one of the reasons why I think technology is going to be cooling off. Now, I want to show you earnings for this week. These are the biggest earnings for this week. There's not a lot of stuff there. You've got GME on Wednesday. This is the implied volatility that's expected, the movement that's expected up or down. There's no directional bias here. Ciena, GameStop, Campbell Soup, TCOM, DocuSign, NEO. Those are the reports, and these are the numbers. If you guys want this report, join my Telegram channel and send me an email to support@marketgeeks.com and let me know you want it, and I'll send it to you. To sign up to Telegram, just go to rogerscott.com/Telegram. There's about 1,800 subscribers there. I give free signals, free trades, pictures of my pets, all the good stuff. And this video gets posted there nice and early. So don't forget to subscribe. Just go to rogerscott.com/Telegram or go to the YouTube Wealth Press channel. It's below the descriptor. But these are the expected earnings and their range, trading range this week. So if you're going to be buying or selling options, remember this amount of movement is already priced in. Now last week, we had the following stocks report. This is what was expected, and this is the actual movement that we got. So CRM was expecting 4.7%. It got 8.4%. So anybody selling option spreads on that really got taken. But if you were buying spreads, then you did well. Chewy, 21.6 expected. They only got 11.6. So selling options on this one would have been really, really smart. Okta, 17.8. They only got 12. So if it's expecting like 2022, it may be a good time to sell premium. But if it's expecting, say, let's see here, Dollar General, which was expecting 19.5, and they only got 5.5, that one is a good one to sell. So you could see here, this week, GTLB is expecting 18.9, GME is expecting 14.2, but Campbell Soup's only expecting 3.6. DocuSign's expecting 3.7. Again, if you want this report, just let me know and I'll forward it to you. I'm already going to make it available. Just let me know, support@marketgeeks.com. But Ciena, GameStop, Campbell Soup, TCOM, DocuSign, NEO, and GTLB. I don't even know what the stock is, GTLB. I better do my research. And then Ciena's coming out tomorrow. but these are the only earnings plays that we have on the table right now. Let's talk about global economy, and then we'll get into charts and the bond market. U.S. Treasury yields climbed. Robust job reports. Whenever the job report is strong, yield climbs, bonds go down. But I think we're going to get some weakness in technology, and that's going to cause bonds to rally. Saudi Arabia said yesterday that it would make additional voluntary cuts of 1 million barrels per day of crude oil starting July. That's less than a month from now, 3 weeks from now, taking its production to the lowest level of several years. The rest, Warren Buffett's been buying energy stocks. The rest of OPEC oil producers agreed to extend earlier cuts in supply until the end of 2024. On the grounds of this, oil prices rose, and they're still rising. On Friday's session, the S&P 500 made a 9.5-month high. Thank you, Nasdaq. It's not due to the blue chips. Blue chips are rising to a 4-week high. I'll be talking about the VIP room today of how you can take advantage of that by buying some of the blue chips and selling some of the tech stocks. So don't miss the VIP room today at noon. Tech-heavy Nasdaq climbed to a 13.5-month high. So look, Dow's rising to a 1-month high, and the Nasdaq's running to a 14-month high. Nothing wrong with that, right? It happens all the time. It's craziness. U.S. Labor Department reported on Friday that U.S. economy added almost 340,000 jobs last month. That's a lot stronger than 180, and that gives the Fed a license to raise rates because the economy is slow, is not slowing down. By the way, speaking of that, I'll talk about the odds of them raising versus not raising, and I'll tell you that squirrely Powell, what a liar. At the same time, unemployment, and that's really what I'm looking at, rose to a 7-month high of 3.7%, weaker than expected of 3.5. Meanwhile, the odds of the Fed not taking any action is back to 82.2%. The report is coming out in exactly 9 days. I got to change my clock. And 17.2 of a 0.25. I think these numbers are going to fluctuate. Don't be surprised if you saw 0.25 at 30-40% before the night is done. In other news, Wall Street Journal reported on Monday that the largest U.S. banks might soon face revised capital rules following the collapse of small regional lenders this year. I'm short the regional banks right now, and I'm going to get out of that trade if it doesn't give us anything in the next couple of days. That's not. It hasn't been going down as fast as I wanted it to. Today, all eyes are focused on the U.S. non-manufacturing PMI. That's coming out at 8:30 right here. Actually, no, it's not. It's coming out at 9:45, 15 minutes after the market opens. It helps to read this stuff. They're digesting a slew of economic activity. Data on Monday showed that the Eurozone business growth fell to a 3-month low in May amid declining manufacturing sector. But in Europe, things are changing. In China, flatline as U.S.-China tensions overshadowed optimism from a private survey that showed service activity accelerated. A private sector survey showed on Monday that Chinese service activity grew at a faster than expected pace in May as increased in new orders support consumption-led economic recovery. I'll see it when I believe it. Japan, sharply higher, closed above 32,000 level for the first time since 1990. That's news, okay? I really like their new prime minister. A private sector showed Monday that the country's service sector activity expanded at a record pace in May due to a rebounded overseas demand and a surge of foreign tourism. I'm bullish on Japan. I'm actually really bullish on Japan, and I'm neutral on China. As I mentioned, energy stocks are up right now. Marathon, Devon, Oxy, they're all up. Why? Because of the OPEC report. Now, the bond market has been coming down. It kind of rallied a little bit. It thought that economy was slowing down, and then a great job report came out. I still think the bond market has more to go, and I think this rally will sustain. I'm looking for higher bond prices and lower yield as the week continues and as technology sector starts cooling off. Speaking of the technology sector, I got to talk to you guys about this. Now, it's too much too fast. If you look at consumer discretionary, only 58% of stocks are trading above the 20-day moving average. 57% are trading above the 50-day moving average. But if you look at this sector, if you look at consumer discretionary, it looks really strong. Look at this thing. Look at this thing. This looks really, really strong. I mean, this looks like a bull's bull, right? Even 6-month looks really, really strong. But when you look at the momentum levels, only 57 are trading above the 50-day moving average. Infotech, way overdone. Look at this. Look at how overdone this is. Here, let me show you this. This thing is way, way, way overdone. Way overdone. So I'm expecting a cool off in the technology sectors, a substantial cool off. This is way, way too much, way too much, way too fast. 9 month, look at this. Look at a 2 year. Let's see, let's go to a 5 year. I mean, it's insane. This is way, 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 way too much, way too much, way too strong, and it needs to cool off. This is a rally, an AI rally, and it's only in about 6 or 7 stocks. So don't let it fool you. If you look at momentum levels, if you look at broad momentum levels, utilities only 10%, right? Consumer staples only 32%. I think we're going to see higher momentum levels on the defensive stocks, like the healthcare stocks, like the industrial stocks, but information technology, communication services, consumer discretionary, I think it's way, way overdone. Matter of fact, if you look at my stock fetcher, you will see, let me just go down here. If you look at the sectors, look at this. Financials starting to break out from this range. Energy's breaking out, but again, we got to go above 82. Utilities I'm really liking right now. They're creating a nice base here, but they're not running away. Industrial stocks look like they're coming up pretty well here. Basic material looks like it's coming up pretty well. But look at communications. All the way up here, I don't think so. Consumer staples starting to rally. Healthcare starting to rally. But consumer discretionary, technology, consumer discretionary, communication services, just not buying it. So I'm expecting these to cool off a little bit, take out some confidence in the stock market, which should start putting money into the blue chips and the bond. I'm actually expecting a rally in the Dow, in light of the QQQ. Matter of fact, one of the things I'm going to be talking about today in my VIP room is selling the QQQ and buying the Dow Jones. I think we're going to see some substantial upside in the blue chips. It's at the expense of these tech stocks that have been rallying like crazy. So don't expect Amazon and Apple and all those stocks to just continue flying up. It's too much too fast. This week, there's no major catalyst for the market, so I believe we're going to see blue chips start to turn higher, or the Nasdaq turning lower as opposed. So in other words, if the market doesn't go higher, I'm expecting either more weakness out of the tech stocks or more strength out of the blue chip stocks. Don't miss the VIP room today. It's happening at noon. I'll be talking about a lot of stuff. I'll be giving you a lot of option trades, and I'll be talking about which sectors that I feel a lot more safer on, and I'll be expanding on momentum levels. Basically, the VIP room is an extended version of the session. Plus, we talk about seasonality. If you guys are liking these videos, and I hope you are, because we're getting almost about 1,000 views a day, please like them, subscribe to the YouTube Wealth Press channel, and post comments and feedback. I respond and I listen to all of them, and I actually respond to each and every one of them. You guys have a great week ahead. If any questions, send me an email, support@marketgeeks.com, and I'll be here every step of the way. Clyde too. Bye.